Okay, officially, welcome out to the Market Watch Group Weekly Market Prep. I am Scott. It's a little past 11 a.m. Eastern Time, and we are ready to talk about this week's market posture score. What changed? What do we like? What are our concerns? How does our watch list look? If we and I think it's all big five. I see movement, money flow going into all five sectors. We may want to examine. We've been cleaning some things up during this correction. Some of our stocks got bounced. We're like, yeah, this thing's, we never traded it. It never really looked great. So whatever it is, it's fine. Some stocks you're going to keep on your watch list all the time. And then some stocks you're going to move in and move out, and you want to have some cadence for that because you don't want stale watch lists. I always laugh when I see platforms that are like, you can have 20 watch lists with 50 stocks per watch list. Like, you're going to watch 1,000 stocks? Like, what's the point of a watch list? Like, what are you doing with that? If you're not going to trade it, don't watch it. Right? Anything that's on your watch list should be like, the next time this sets up, I'll take this trade. That's simple. So, let's go in. Disclaimers. As always, we're not brokers, we're not advisors. We don't give advice or recommendations. Education and illustrative purposes only. Today's agenda, market posture score. We'll go through component by component. Those of you who are new or newish, please take advantage of the opportunity to just ask, just throw the, when I get to a component and you have a question about it, just throw it out there. I'll address it quickly, or I'll say, oh, that's a great question. That'll take a little while. Bring it to tomorrow's, or bring it to Tuesday's foundations. I definitely want you to feel comfortable asking questions, and making sure that you feel comfortable scoring the market. We'll look at this week's economic calendar. What do we have? It's pretty light, if I remember correctly. If we think there's a sector in our watch list that is underrepresented, let's run a search today. Oh, I was wondering if this was going to do this to me. I unlocked it, but I wondered if I had to re-log in. I hope it's working. Sundays with Thinkorswim. That's when they do their maintenance, and sometimes it's spotty. We'll do some watch list maintenance. Is there anything on our list as we move into where it looks like this market has gone through its correction and is potentially moving back into some bullish momentum? Is everything on our watch list supposed to be there? Right? So this is our last, like, okay, everything on here right now, if it gave a signal, and I would expect that it does give a signal, everything on here is tradable. That's what we should be thinking to ourselves. Okay. How did the trading plan section go? Anyone work on it this week? Did you get some time in on section 1? Any time at all? Hopefully, yes. Remember the core ask for section 1 was at least 3 strengths and 3 weaknesses, one paragraph for your mission statement, and you could freely plagiarize or take from mine and then manipulate it how you like it. It's a pretty, it's not super specific to any strategy. And then 1 sentence for motivation, for commitment and for vision. Love it. Cap, yes. David, yes. Article, yes. I love it, you guys. I love it. If you didn't, and I'm a procrastinator, so you may be like me where you're like, I meant to. It's not a punt. It's not a bunch. You still have today. You could still just go in there. It's 3 strengths, 3 weaknesses. Write a paragraph or go look at mine and pull it over. a sentence, and then you have your first, right? And you'll be at least thinking about it. Because today we're moving on to section 2. Section 2 is all about what we're doing right now, which is market posture. And so, again, this is a great time to be asking questions and making sure that this is how I view the market posture routine. If I got stranded on a desert island and I was there for a year and I survived using my wilderness survival skills that I learned as a Boy Scout, of course. And then I got rescued and came home, so happy, hug my family, take a shower, get a cheeseburger, and then the next day I'm like, okay, let's get back to trading. I know nothing. What's the first thing I'm gonna do? That's a good question, right? What's up? Are you gonna get out the Wall Street Journal? Let me read the Wall Street Journal and see what's going on. Are you gonna go to Yahoo Finance? I am gonna conduct my market posture. I'm gonna ask the market. That's what I'm gonna. I'm not gonna go read about talking heads or listening to talking heads or anything else. I am gonna go ask the market. I will know everything I need to know. I'll be like, all right, let's get trading. I don't need anything else. I know what's going on. I know where the money flow is, right? I got a sense of some news from the economic calendar, what's coming, what's going on. I might want to look at some news. I might look at a little bit extra news, but that's what I would do. I used to teach boot camps, great energy, great class, but people would go like, it's great. You have 15 people, 3 instructors, everyone's working. And then they'd get home and they'd send an email. They're like, oh, the class was great. It was so, and then I got home and it's just me and my computer by myself. What would I tell them to do? Don't ask me what to do. Ask the market. The market will tell us what to do. We just have to ask. Let's go ask. All right. Let's go ask. Last week. No, let's see. What am I looking for? I'm looking for this. Last week, I only dropped by a quarter, so that was like our most stabilizing since we started our drop. You can see we had this boom, boom, boom. It was a fast drop, right? We lost almost 10, the NASDAQ 10, almost 10 on the S&P. From a depth perspective, it was not as deep as the full correction we had last year, August, September, October. That was a full correction. It was a little deeper on the NASDAQ. But that took like 3 months. This took like a month. It was like, bam, 3 weeks. It was much faster, right? The question is, are we done? Is it over? That's where we are. We got to a point where we saw some stability. It stabilized in a bullish posture. So we maintained bullishness. We didn't panic. We didn't anything like that. And now the question is, do we have what we need that sort of opens the door for more bullish trades? Yeah, let's go look. Let's go look. Okay. Now, I always go 3-year weekly, but remember what we're trying to do is identify the current trend. And you can actually see the remnants. We don't care about back here in 2022. This was actually a bear market back here, right? This was 28% from high to low. So it was dropped, and then it dropped again, and then again, and then again. And then it stabilized, and then now what? Well, we had, where's my drawing tools? It's coming. It's taking a second. We had this trend initially coming out. This was really from about, it wasn't until about, I would say, like January that it was established. This trend wasn't established back here, maybe even here in March, right? So we had this trend here. Then it accelerated. And we had this marked with these red lines, right? And there was a couple of times where it moved in and out of it, and we had to make note of that. And then it accelerated back into red, and then it accelerated out. And that's what got us into these black ones here. That's our current trend line. This is what we're scoring now. Well, the fact that we popped out of it, we dropped 1/4 of a point. Now what's happening? I got right back in. Bing, bing. Right? Right back in. What does that tell us? It tells us that the buyer's got some strength. So what am I going to do? I'm back into the prior. If we're back into that blue trend, then I'm going to score it whatever we were scoring it for the blue trend. Now, here's the deal. Maybe it keeps on going higher and that trend is perfect. Maybe it doesn't. And we'll score that when the time comes. But for now, it got back in. That's substantial, right? And it bears giving that 1/4 point back. The long-term trend was not happy. It filed a protest with the judges, said, I want that 1/4 point back. And I'm like, okay, your protest is acknowledged, and I will re-award you that 1/4 of a point. I'm going back to a 1.5. What do you guys think? Yes? No? You like it? It feels right? Agree. Okay. Yeah. Trained back on. Love it, press. Back on schedule, baby. Yeah. Okay. Easy enough, right? That was an easy enough one. Now, here's the thing that I always want you to remember. We aren't scoring whether we're at the top or the bottom. When we do our trend analysis, we're scoring the trend itself, the angle of the trend, the strength of the trend. We're not scoring whether it's at the top or the bottom of the trend. That's support and resistance. Support and resistance is a trading posture concept. Trend is a market posture concept. Subtle but different, right? Because when I'm thinking trading posture, where I'm like, hey, yeah, I'm bullish and I'm more bullish, but then we're like, well, you're bullish, so are you putting bullish trades on? Not if the market's at resistance, no, right? If I'm at the top of my short-term trend, that's at resistance, I'm going to score the trend itself. But then when we move to like, hey, are we trading? That's when support and resistance comes into play. We don't want them to bleed back and forth. It's unnecessary. We don't need to look at support and resistance when we're doing market posture. This is just the broad overarching, hey, how do we see this market? When we look at our day-to-day of like, are you trading today? Are you doing this? Are you pulling the trigger? Are you getting out or getting in? Then we're much more focused on where's our support? Where's our resistance? Right? I sometimes, if I can take a break because we're on this section anyways, if we go look at market forecasting is the broad representation, the broad, construct of our routines and our objectives. When we're done with all of it, we have to be thinking about market posture. Then we think about trading posture, and it boils down to implications. Everything we do leads to action. So then it's like, what types of trades? How long should they last? What kind of risk? What strategies? When we know this, it's so much easier to determine this. And then our day to day is just execute. It's hard when we're like, every day we're like, okay, what do I need to do? Yeah, let's come into every day with a much better set of expectations. So, okay. Short-term trend. Let's drop it down. It was more than I was expecting for sure, right? Even in there's something wrong with like my drawing tools and I can't draw well right now. I'm going to have to just kind of point. I'm going to go slow. So I have this point here at the top, and then we dropped hard in 3 days. 1, 2, 3. And then from there, we said, what next? We said it could go up and flag and then drop. It could go up a little bit and then drop. Remember, one of our 3 possible courses of action, right? Price progressions was the V. It was not the one. I'm not like, hey, I really think this is going to V. I think we're going to just pop, 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 pop. I didn't say that. I didn't think that. I said it could happen. And when it got to this point, even here, we're like, it could keep going. If you're in something, great. Now, in hindsight, could you have gotten in something on this day because it made money here? Yeah, that's a tough trade, right? You just had a lower low, you're at a lower high, and you're like, it just went up 3 days. No, I held some. In fact, if you weren't here on Friday, for me, I'm thinking anytime I have a correction, not even a correction, even just a major or a strong consolidation like this one back here in April, dropped 5%, stabilized, and then took off again. I want to look at this period of time. This is the period of time where we learn something. There was an old trader. He said it best. He said, "I never learned anything making money." Right? If when things are going well, we're not really learning. We're just like, hey, let's just hit it as best we can in the flow. When we learn is when the market transitions, because when the market transitions is when most people give the money back. Now, we always are going to give some money back on the transition. But if it's a little bit, and then we move into the next bullish run and we make more, and then we give back a little bit, then we've succeeded. But a lot of times people end up giving it all back and then some, and then they're starting from a negative place, not a positive place. There's a lot of lines on this one, Bob. I get it. Bob said he's challenged by all the 100%. There's a lot of lines in here, and this is only on SPY for me. Only on SPY. So what I will have in here is right now I have 3 moving averages, because when I break the 50, I add the 100 and the 200. Now, as soon as we hold a support level above the 50, I'm going to drop these off. I don't need them anymore. And then I leave all of my I leave all my trend lines and all my old drawings. The rest of my charts are a lot cleaner than this. But on this one, because this is representative of the market, I like to see remnants of my old thought processes so that I can go back and be like, oh yeah, when it was here, I was thinking this and then this. It's kind of the same thought process as to why I think it's so important that we have an archive of our market analysis. People think, oh yeah, we'll just look back 4 months and we can look at what the market did and what we did and learn from it. You can't. That's false. You're not going to learn anything because you don't have this piece. If you don't do what we do, you need this so that you can go back and you can be like, look, the market was bullish, but I scored it neutral, because that's going to tell you where all your mistakes were if you weren't making money. You weren't making mistakes trade by trade. You made mistakes in how you assessed the overall market. That's the fallacy that so many traders have, is that they're going to go one trade at a time and just like, no, like you're missing the big picture. You should be able to go back. Like if you lost money, go back. If the market was down, great. Then the question is, did you lose more than you should? And now it's a risk management consideration, right? I don't think people realize that we don't need to do so much. I mean, yes, we want to look at each trade sometimes and make sure that we're executing our rules. But from a broad perspective, getting the market right, that's the most important thing, first and foremost. Okay. My choice of exponential or simple. And this is something that you can play with. It's subtle. It's really not a huge difference. But add the other one so you can kind of see. The exponential is going to be just a little bit more responsive to more recent activity, right? Whereas simple is going to be equally distributed. I want it to be just a little bit more sensitive to more recent action. But if you ever go in, you could just go in and put on a 50 versus a 50 simple versus a 50 exponential and do it for all of them and just be like, oh, okay, I see. That's how I learned a lot more about technical indicators by just putting them on and looking at how they actually work, like one versus another, this versus that, than I did reading books about how they're constructed and like the formulas behind them. And I did read those. So, yeah, we got the V. So what does that mean to us from a scoring standpoint? I have to give it some credit for that. We had a lower low, and then we didn't technically get a higher high. I mean, we haven't had a higher high or a higher low because we didn't take out this and we didn't drop yet. I'm still going to give it a quarter of a point. I kind of feel like I want to give it a half a point. Like, I feel like, you know what? I feel like a V should be worth a half a point. That was what I was thinking during the week is if we're in a situation where we're doing quarter point, like, you know, oh, you get a quarter point for that. Well done for your team. Oh, you lose a quarter. I think a V is I think it's a half. But let's vote. All in favor, say aye. .5, very strong. It's a strong V. Yeah, ayes. Okay. Got a few more typing. I'm gonna wait before I ask for the nays. It's steep. I mean, honestly, the V itself is okay. Any nays? Previous high meaning 565 press. I mean, it's for me. That's the next stop, right? And I don't think I can draw. I still can't draw. But you have almost. Imagine you think this is your shoulder, head. What do we think would come next? Shoulder. Maybe it tests the 50. Maybe it gets a little bit back into this. It doesn't have to. I'm not like, oh, it has to hold the 50 now. No, we're not dogmatic about things like that. If it comes into this range, it's still a higher low. This next pullback, I mean, there's just not much volume here this whole time, right? I'm doing it. I'm going with the 0.5. It's a 0.5. The ayes have it. We're giving it the full one. If I can get that clicked. I think I need to like update my computer. Everything seems to run slow. Okay, perfect. That was a good discussion. Let's go to volume. So volume is still negative. Still negative 0.5. This one's going to be interesting. I felt like it was going to stay the same. Did anybody score in advance? If you're scoring in advance, let me know. I love that if you are. Okay, what do we have? So we have a couple of days back here that are big volume days. I'm going to throw those out. They're stale. I'm going to throw it out. It's stale. But I have, I can't draw right now. So I'm going to say 1, 2. Those are definitely sellers. 3, 4, 5. No, we said that's That's a wash. That's a wash day. Why? Because it's close to this. I mean, it was down a little bit, but only a little bit. So 5. Buying days. 1, 2. 5 to 2. 5 to 2. So remember that if it's a tie, it goes to the buyers. Tie goes to the buyers. So if it was 2 to 2, it would be a 0.25. 3 to 2 would be, let's say, a 0. 4 to 2 minus 0.25. 5 to 2. I don't know. Tie goes to the trend. Ooh, that's an interesting concept, Miguel. So this for me is on the bubble between a 0.5 and a 0.25. Minus 0.25 and a minus, excuse me. Right now we're at a minus 0.5. I think it's either there or possibly you gave it a little bit of improvement. But I don't know. 5 to 2. What do you guys think? There's 5 sell days. I mean, you can see it's all right here. And then we just have this move back up. Now, our sanity check is we started right here and we ended right here. So we ended just almost back where we started. So I feel like the sanity check would maybe push it to the minus 0.25. The other thing is we're going to lose 1, 2, 3, 4, 5 days. We're going to lose 5 days next week, and of those 5, 3 of them are selling days. You know what? I just talked myself into it. I'm going to the minus 0.25. I'm going to the fact that we got it back, the fact that now this is stale. This is last week. This is the last week. It's getting stale. It loses its impact. Yeah. Okay. That was one I wasn't certain about, was volume. I wasn't certain what that would look like, but I think we got it right. I think I'm going to go here, minus 0.25. Any concerns with that, flag them now. Let me know if you have any concerns with that score or why I did that. Otherwise, let's go look at the major market. Okay. Am I influenced but what I want it to be? If I'm going to be 100% honest, I would say that there's a chance I am. I try not to be. Cap, that's a great question. I think we have to reflect on that, right? 100%. And I try not to, which is why I call it out, right? Which is why I'm like, okay, what do we think about this? There's actually times where I'm going to mark my score with a yellow box so that the next week I'm like, is this too early? Should I leave it alone now? Should I go back to what it was because it didn't pan out? I think that's not just the question that you should ask me, but that on a regular basis, you should ask yourself. Am I influenced by what I'm hopeful that it should be? So the objective is no, but reflectively, I think we have to acknowledge that there's a good chance, and that's what we're trying to see if we can, spotlight, like, oh, you did it again. and then we rectify it. Now, I think sometimes I do call that out for myself where I'm like, this might be, but I think if you feel like, and I don't know if you're asking because you're like, I don't know, Scott, are you just trying to be hopeful? Flag it. Be like, hey, it feels like you're just hopeful for this so that I can be reflective myself without a doubt. Like we're here to keep each other honest. And what a phenomenal question to ask. Okay. Major market. Major market. What do we have? Well, we definitely have the NASDAQ. It's funny because as we watch things come down, the NASDAQ fell all the way to, but it always like maintained just barely its like leadership position. And then when everything got close, he's like, oh, everyone's getting close. And then he took off. I don't know. So it's like, I say he, I don't mean he, but let's go see what we think about this. 133. Oh, like there's the whole pack almost lockstep. Almost, the NASDAQ says, reminding us all that it's still at the top. S&P next, the little brother Russell lagging behind, and the old grandpa stalwart steady Eddie Dow's back here. Okay, so this seems to be holding its bullishness that we felt like it held. Let's go to 66. Oh, well, all of a sudden, it's like one of those times where my son's like, you're not as fast as me. And I'm like, let's race, because I got you for at least 10 or 15 yards. Oh, not anymore. Not anymore. But the Russell's still hanging on. These two are back into this little tie. But if you remember, we were scoring it at a 0.5 back when it was a tie before. So this is fine. If we see the tie start to play out one way or the other, Dow starts to win, we might drop this back to a quarter point. Russell starts pulling ahead, we're going to move it back to 0.75. So remember that's what that's looking at. For this to get stronger, we need to see money flowing back into small caps. A steady flow into small caps is a strong sign of a bull market. So yeah, for me, no change here. Nothing better, nothing worse. Right? Nothing better, nothing worse. This is still leading. Everything still looks bullish. And these two are back into a little bit of a back and forth. And let's go see what 22 says. So from 22 days, the Dow's actually a little bit ahead of the Russell. Huh? That's interesting. Questions, comments, concerns about that analysis, what it means. Remember, one of the things that we're looking for is to flag any risks. Where do we see risks? Prior to this last week and a half, we flagged the VIX for a little while. If you remember, I told Glenn, watch, you're gonna love how this thing works, and it definitely flagged things coming. Now it's come back down significantly, right? We talked about the risk of the dollar, but the dollar has come back down. So we just want to make sure that whatever is going on that might have some kind of negative impact, we're aware of it. We're not like, I'm not going to trade because of it. As high as we've seen the Dow. Yeah, the Dow showed something, right? The question we always are asking as we watch the movement between the Dow and the Russell, especially right now, is that just broad-based, everything's moving up or down, or is that realigning the posture to be more defensive or more growth-oriented? Now let's look at this. So we have financials at the top, and then boom, technologies like, oh, financials. Thanks for keeping my place warm. For how long is the queue? In reference to the question, Sandy? Com services. Right back where it needs to be. And okay, so now if you look here, the Dow position. If you look here, the financials, technology, com services. Those are the big three of the big five. We also are thinking about consumer discretionary. We're also thinking about industrials. Well, industrials are just right down here. They're like, I'm coming, wait up. Below that, we have utilities, healthcare, discretionaries down here, and then energy. Now, here's the thing. This one, I'm curious. Before we get there, because you can see already, look at utilities. And you're like, oh, man, that's so defensive. And if you look at our score here is a 0. Other than volume, which dropped down to minus 0.75. This was the worst, getting down to a 0. So I'm very curious, does this still look bad, or do we get a little bit more out of it? We're not getting anything out of this. We just have this pack down here with one thing up top. We need to get to the 66. This is where it's going to get interesting. I found that one hard to analyze, Sandy said. You're not alone. You're not alone. Who else is with you? Probably everybody else in this room. And I mean everybody else in this room. I find it hard as well. Like, what the hell's going on here? It's crowded. It's choppy. Miguel says, I'm just understanding this concept. Well, yeah. Well, if you're like, I'm not sure if I get it, then you do, because we don't get it either. We're all trying to be like, what does this mean? We don't know. It's at a 0. That means we've scored it right. It's neither helping nor hurting the posture right now. That's what it means. We're just trying to see if we can figure out when it does start to figure out what it's doing. Because, right, we see technology here, but we see healthcare at the top. We got technology. Then we've got comm services. That's good. We've got staples. That's defensive. We've got financials, right? This is just, you've never done it until now. I hope you find it useful, because this shows us where institutions are sending money. I don't see any reason to change this from a 0 right now. Tell me if you disagree. It was a 0. It stays a 0. If we see the technology or comm or something like that pop up, we'll start to give it a 1/4 of a point. It just hasn't happened yet. Maybe this 22 will give us some insight. And you can see, not yet. Look at the top of 22 days. This is insane to me still. At the top of 22 is utilities, defensive. Second, healthcare, somewhat defensive. Third, staples, defensive. Even though we know that if we go to the last 10 days, bam, it's just this surge. Look at the surge. Anyways, I'm leaving it. It's a 0. Fair enough. Let's do a quick Fed watch. 3-1, we get a 1/4 of a point. That feels right. What do you guys think? 1/4 of a point. The market was like, oh, maybe we're going to get it 50. It's Jer Bear. Listen to the name. Jer Bear. He doesn't throw half a point surprises. That's not what he does. He's no thug like Alan Greenspan. Alan Greenspan was a thug. He lived the thug life. I actually think Alan Greenspan is 173 years old. I don't know. I've just got a theory. 3-1, we're getting it. We'll come back. Who cares after that? Defensive or growth? Yeah, I don't really have them labeled. Think about it. I have 3 ways I label sectors: defensive, growth, and I'm blanking on how I used to phrase that now. Commodity based, which is just like, the cost, inflationary. So if energy and materials are at the top, that's like what we saw back in 2007, 2008. Energy and materials were the top of the list. What's happening? High inflation, right? In fact, in that time, it was stagflation. So those are your inflationary. We have materials and we have energy. Then you have the things that we need to grow. We need money to grow. So things need to be financed. We need obviously the technology. We need to build things, so the industrials. People need to buy things, so consumer discretionary. And then they need to market it, and we need to consume it, and that's the communication services. Those are the ones that are, when the market's good, that's where we're expecting things to lead. Then when you think defensive, think, what do you need? I need to heat my house and turn my lights on, utilities. I need to eat, brush my teeth, take my medicine, right? So you need your consumer staples and you need your health care. If those are leading, we see it more defensive. And so as we watch this, what are we looking for? We're looking for money to flow into these growth sectors that indicate that the economy's on pace and the money's flowing in that regard. Okay. Lastly, but not leastly, the VIX. The VIX. Of course, I love the VIX so much. What have we done here? Well, we took out this low. So that is at least a lower low. Now, the question, the question I have and that I'm reflecting on is, did I miss the opportunity to call this? It dropped to here, even lower, then it went up, over, and down. So was this, what did I just do? Was this a higher low that I did not score? Let's go look at the score. So we dropped from 1 1/4 to 1 to 0.5 to 0.25. Did I miss one? I didn't do anything with it. We definitely have at least a 0.25 now. What's the 0.25 for now? For taking out this low. We have a lower low. No matter what, this low is lower than this low through here. But did we already get a lower high? That's the one I'm struggling with. The stochastics did not see one. It pinched but never turned. I don't know. Do we leave it? That is something that I feel like I missed. Especially because I acknowledge that this was just blown way out of proportion. I did catch bullishness, but if I had said that this was a higher low, nope. If I had said that this was a lower high, I would have been much more bullish on this move. That's why I want us to have this conversation. Because that is something that would trigger a higher level of bullishness. If it goes from here up to 20 and rolls over, that's another lower high. Am I going to be more bullish there? Yes, 100%. That's going to be more bullish. So the question is, did we miss it? And I've called this out before where I say, sometimes when there's these little one-day consolidations, I struggle with those where I'm like, was that just a blip? Did it? And then I wait, and then I'm like, oh, I guess it was. But if I wait until I say I guess it was, well, now it's too late. Because if you remember, we said it's put the trades on now or not at all. We can't wait and then be like, now should I? That's too hard of a decision. Any thoughts? Anyone want to say if they think we should have? Or if you did you give it a 1/4 of a point and I didn't? If you did, that would be awesome. I want to hear about it. So the reason I'm asking is, A, should we go a 1/2 point? Or did we already go a 1/2 point with the V? Maybe I'll just leave it as a 1/4. It's hard to see a change from a single day. It is, Press. It is. That's why I struggle with it. But it definitely happens, right? It definitely happens. And it tends to happen more like this one here. 1, 2, 3, pause, boom, boom, boom. Let me see if it did it. Let me see if it did it back here as well. Right? Look at that one. Big one. That was on 11.9. Okay. Let's go to 11.9. Boom. I kind of feel like, look at that, like it does. I think we need to catch that. I think we need to catch that, especially coming out of these VIX spikes. If it gives one of these little patterns, I think it's worth it to go. That's my thought. If you disagree, then you should just be a little more conservative. But if you agree, we need to be able to catch that because it can be so fast sometimes on the recovery, like I said, right? Now, there's hindsight here. So right now I'm going to go back to Cap's question. Is this what we wanted? Are we like, oh, well, looking backwards, look at this. Yes, but if you remember, I flagged this at the time. Like, I'm calling this out more from a pattern level, not like this one-off. I'm saying, look, we can go back and find times where this type of a situation happens coming out of heavy levels of vol. This is a great example right here. But you can see it's not the same. We had one day drop, boom, boom, boom. That was so fast. Miguel has a good point. He said back on July 21st, this is a great point. We were a 1 and it was a 15. So yeah, you know what? I'm gonna give it I'm not gonna give it back to a 1. And I don't know that you were actually asking for that, Miguel. I think you were just saying, hey, moving it to a half a point doesn't feel right when it's back at 15. 15. Okay, there it is. How does that feel? How does that feel? 3.5. Does that feel right? We got a great week. It completed a V. That's a great week. We moved up a point and a half. Are we like right home because how bullish the market is? No, we're at 3.5. Does a 3.5 give us confidence that now, let's get to our watch list. I think it feels right. I do. I definitely think it feels right. That feels like a good score. That's the bottom line of what we're trying to do here at the end of the day, right? Is do we understand the market? I don't feel like there's any real big risks either. Yes? No? I mean, we shook a lot out. We're getting closer to that cut. The Fed being accommodative. Not sure. There you go. Clint called it out. When will we get that pullback? Press says Monday morning quarterbacking. If a VIX spike's going to be leaning towards defensiveness too. Yeah, I mean, honestly, I kind of want it. I kind of want 2 or 3 days, right? Give us 2 days of pullback stabilizing on Wednesday, and we'll rush some trades on Thursday, Friday, and get going. Let's get going. That's what I'm looking for. But it could keep pushing, and at this point, I just don't have anything left. I think I have like one piece of one trade. As far as short-term things go, anyone still pushing a lot? If you got some more, great. If you added some, fantastic. Let's start at the top and work our way down. Looks bullish. I just need to get a piece in. Give me a pullback. Amazon paused. That's a good one. I'd love to see this. I would think we should be looking for flags because we had a pull. So I don't think we should be looking for like 3 to 5 day pullbacks. And in fact, I think we need to be ready. As I say, I struggle sometimes with one day consolidations. Okay, Buttercup, well, you better toughen up and get ready because that might be what we get. We might get just like a one day, boom, and then it just stable and gone. And then it goes, and we have to jump. We got to get in. Powell speaks Friday, so we could see consolidation waiting for that. I don't think anyone needs, I think everyone, we're at 100% for a cut. 100% expectations. I don't think anyone's waiting too much to hear what he has to say at this point, but there could be something coming out of that. Amazon, I would trade Amazon on a pullback. There's just everything that made moves like this. Look how much buying. There's more buying here than there was on this or this. Any other move you see on here. AXP, just a pullback. Just a pullback. And the fact is you need to pick. Pick your favorite 2 or 3 from each sector, or 4 maybe. What are your favorite 2 or 3 financials, favorite 2 or 3 industrials, favorite 2 or 3 technology, favorite 2 or 3 communication services? Is it Citi? Is it AXP? I think you should have a credit, a bank, a broker. That's my thought. Caterpillar. I like Caterpillar, looking for the pullback there. I'm not doing any consumer, the defensives. I'm not looking at Colgate now or Coke. I don't like those. Costco, maybe. CMG feels iffy still. Costco and Walmart they sit close enough to discretionary in the consumer space that I have no problem with them at any time. Carvana on a pullback. Fastenal, that one was a go we talked about. We said, hey, it gave a signal. It turned. I think some of you might have taken that one. Yes? Possibly? Yeah, I like it. GBTC. Gold. Look at gold. I think a few people got shook out of their trades right here and then popped. That was a tough one. No breakout there. General Motors, I like that from a consumer space. Google. Okay, so if the market's bullish, I might have a go here. We might look at this on Monday. I think this is trying for the sneaky reversal. It fell behind. It fell behind Meta. Right? Meta's like, oh, Google. And Google's like, nah, we're not getting taunted like that. Antitrust or no antitrust. That's a maybe. Home Depot, IWM. I like JP Morgan, very strong. Home builders, no, not really. Coke, not really. I don't know. Coke still does look strong, to be fair. Meta on a pullback. Already, we might get like just this flagged at 520. We have the top of a lid, then it comes down, and then it comes back up, and that's our cup. And then we might have just a little baby teacup handle right here. And if it comes down to 520 turns and then it breaks 540, this thing could move 80 points. It could fly. It could definitely fly. Yeah. I still think there's plenty of institutional money sitting on the sidelines as well. MMM, it's more defensive, so I'm not as interested now. Morgan Stanley, look, a lot of strength there. Microsoft starting to pull back. I'll trade Microsoft. Broke out of its consolidation, higher high, pulling back. Anything above if it breaks back below the 200, I'd probably be like, no. But anything above the 200, that's a go. And it's Microsoft, and it's Apple, and it's Amazon, and it's Google, and it's Costco, right? Like when you look at our heat map, our list of things where we think the buyers, yes, it's on the list. It's on the list. JP Morgan on the list. BAC on the list. Citi on the list. Apple, Google, Meta, Amazon, Costco, Walmart, Home Depot. Like all of those are on the list. So if all those things are on the list and all those things start moving, what are they going to do? Those are the ones that carry the load, that shoulder the burden, that carry the rest of the market with them. Yeah. Micron, I think Micron is viable even, but I like Tesla, or I like Nvidia, and I like TSM better. So it's like technology's taken care of. I've got Apple, I've got Microsoft, I've got Micron, or I've got Nvidia, and I've got TSM. I've got Netflix, Google, Meta. Here's Netflix. Look at Netflix. What a beast. Here's Nvidia. Broke the consolidation. Higher high. Looking good. PLTR. That's a runner. QQQ looks good. SPY. I mean, everything looks good. We just need the consolidation. We're just at resistance. If we lose patience, we're like, oh, now I'm getting in. I'm like, yeah, don't be first. Don't be the first. Wait. Don't break ranks. One of our concerns was the dollar back here, and you can see where it is now. We said we'd like to see it get under the 200 and stay there. Well, that's where we are. The VIX. There's Walmart. Okay. Let's talk about our trading plan for the last 5 minutes. I'm just going to go over a few minutes. What are we doing? You're detailing your routines. So each one of these has a video. If you go into the content library, in the content library, you will find that there is a video for each one of these. And what it does is it walks through, what chart are you looking at? What is the range for the score? How do we determine it? So all you need is just some brief notes for each one. 3-year weekly chart on SPY, finding long-term trend, scoring from -2 to positive, whatever. You'll find how you want to voice that. That's all you're doing is making sure you have a good sense. What helps, I think, is to have the objective. What's your objective? What are you trying to understand with long-term trend? I'm trying to understand institutions. That's their trend. With the short-term trend, I'm trying to understand traders. And what are the traders doing? With volume, I'm trying to understand conviction. Who has more conviction on the important days, buyers or sellers? With major market analysis, I'm trying to understand the appetite for risk. Is the market's appetite for risk up, and I need to understand that, or down? With sector rotation, I'm trying to understand money flow. Where is the money going? That's not just to score the market. That's also to go make sure that I build my watch list appropriately so that I have representation where money flow is. Yeah. And then the last thing is VIX, and that's the sentiment, and that's institutional sentiment. So I want you to realize long-term trend is about institutions. Sector rotation is about institutions. Volatility is about institutions. Volume is about institutions. VIX in short term is about traders. So the VIX in the short term, as traders go through things, they're the ones who can disrupt it. But what we're scoring fundamentally here is what the hell is the Titanic doing, so that we as a little speedboat, when we see it turn, can shoot in front of it. That's our advantage, is speed. Speed. Let me show you. So as Sandy said, you need to make sure you have all your channels. So you should have Beginner's Corner, Ask a Question, Trading Resources, Group Downloads, Suggestion Box, Trading Discussions, Market Watch Chat. A lot of good stuff in there. Then you have your voice channels, obviously, where the recordings come, trade alerts come, any announcements that might be like time changes, things like that, and then our stage. So if you go into the Trading Resources, you have a sample trading plan. You have your first stock trade. You have the links for documents, including the content library. And if you go here to the content library and you click on this, that'll bring you into a doc Where'd it go? Where did it go? Boom. It's under construction means that there's more coming, but anything that's linked is ready. So if you come down here, you have trading plan videos. We have a video for each section of the trading plan. So if you want to look at the video for market posture, that's right here. I don't know why it says request edit access. You should be able to just click the link. I'm trying to get these all into a better place. This was just what we had at the time. Then you have your market posture videos, and you have long-term trend, short-term trend, volume, major market sector, VIX. There's just a lot of content in here. Go play around in there. And then when you have questions, you can pop in and have great conversations with other people. Okay. Okay, yeah. Market posture. What is your objective? Trading posture, implications. So basically you're essentially creating your week to week roadmap of how you're going to assess the market and produce, so that at any given time, if I said, what's your market posture? You'd be like, oh, yeah, I'm a 4, which means I'm bullish. Not strongly bullish, but bullish. You would be able to tell me what sectors you like. You'd be able to tell me what option strategies you're thinking about. You'd be able to tell me, what, how long you expect trades to last, how much risk you're taking per trade, right? I mean, all the things from all of that should be predetermined, so that day to day you're just managing trades. Okay. Good day. Only went 6 minutes over. I think I only lost one person in doing so. You guys are amazing. Any problems? Any concerns? How's everybody's market posture feeling? Like, are you feeling like, hey, this is making sense? This is a little scary because I'm actually feeling like I understand the market better. I hope so. And I hope that, yes, Sandy said it right. It's in understanding better, it gives us the ability to be like, hey, we're really looking for signals this week. We're not gonna hesitate, because we're gonna be like, we've been gearing up for it. So when they come, it's not like, should I? We go. Have a great week. And no, what am I saying? Have a great rest of your Sunday. There's only like a little bit left. I only have like 5 days with my daughter, and she goes back to college. I'm gonna be so sad and cry. Yeah, not great. Okay, you guys, enjoy the rest of your day. I'll see you tomorrow morning. As always, happy trading.